All right. So a lot of people debate, technical analysis and charting. That's what technical analysis is. You're looking at these different charts and analyzing them. Some people think that technical analysis and analyzing charts is total voodoo and it is meaningless because it's all about the fundamentals, meaning, is this company valued highly? Should it be valued higher? Or in this case, this chart, these are the diamonds, which is an ETF or exchange traded fund, which represents the Dow Jones. And the Dow Jones are the top 30 stocks in the US. They change based on what industries are hot. But when you have a breakout like this is a very big thing for those of us who care about technical analysis. Now, the way that I use technical analysis is a little different than most. While I'm very happy when the Dow Jones or the S&P 500, another major U.S. index, breaks out of a range, because 3 out of 4 stocks follow the market. I want the market going higher. That gives more opportunities usually. But I don't really care about the exact levels that the Dow is at. I want, a gradual uptrend for my longs or a gradual downtrend. I just want there to be activity. And the same thing with technical analysis on individual stocks. I don't need there to be exact, breakouts or breakdowns. It's more of a guide. And that's why I'm very proud to introduce all 7 indicators, because too many of you guys don't rely on technical analysis enough. You say, oh, it's totally irrelevant, or you're entirely technical analysis. But here's a basic breakout chart. If you want to understand what charting is all about, you're looking at former highs here, and you can see here there's a clear breakout above the former high. And then also on the bottom, this is called technical support, where you see it's in this range between 86 and 82.5, it looks like. So this is a breakout. And this is what oftentimes happens in stocks and anything that breaks out of charting. You have the initial breakout, whether it's based on good news or hype or whatever. And then the breakout usually fails after a few minutes, hours, days, or weeks, and it comes back down. And sometimes, it's a fake out breakout where it'll break out and then come right back down below the breakout level. This is a successful breakout. So you have 2 chances to buy. And I do use technical analysis to basically buy. This isn't the Dow Jones Industrials ETF is not volatile enough where it goes from 86 to 87 over the course of 2 days. I mean, I'm not going to spend 2 days watching something to try and make less than 1% on my money. But this is a nice example of a breakout. It comes right back down to the breakout level, and then it holds, and then you get a follow-up breakout. So that's a very good sign. And this was the beginning of the bull market. The Dow Jones has just kept rising for now 7 years, which is insane. This is the second longest bull market ever. But I want you to see what a clear breakout looks like. You can clearly see that the top was 86, and this is a breakout. Here's another chart of some basic technical analysis. You can have this kind of breakout. This is just another irrelevant financial instrument because, again, these breakouts are on very non-volatile instruments. I mean, the breakout here is at 26, and it takes several, days and weeks to go up to 28. So I'm not going to try and buy any breakout that might go up $1 a share over several days or weeks. The charts that you'll see in a second are much more volatile, but I want you getting used to looking at past former highs and seeing, how it reacts right at that level. And you can see here, this is the breakout. It comes back, and guess what? It comes back down to the breakout level. So for me, on anything, not on this one because it's not volatile enough, but I'm looking to buy the initial breakout, or I'm looking to buy the breakout when it holds, when it's a confirmed breakout. I really don't like dip buying that much because even though in this case it worked, you don't need necessarily a flat line. Sometimes you have like higher lows, and this is a nice uptrend. And if you bought when it's getting close to this line, it would have worked. I'm just too scared if this breakdown fails. Oftentimes when you're trading the volatile stocks that I trade, if you're buying a stock on a dip, even if it's on a dip, it's still up a ton over the past few hours or days. So there's a lot of risk if the support sometimes fails, which you'll see in some charts. So I greatly prefer buying breakouts. And actually, when it starts dipping like this, I actually look for the short. I look for it to break this support, ideally if it has the wrong news or the wrong catalyst or it's up for the wrong reasons. Here's another example. These are all just basic technical analysis that most traders use. And here's a symmetrical triangle. It doesn't always need to be a flat line. Sometimes you can have this kind of wedge being formed here, and this is the breakout level. Or an ascending triangle, which is what we saw earlier, where you have this flat line and you have lower or higher lows, and it's forming this kind of wedge and it breaks out. Or a descending triangle, which is what I really like to short sell when you have this level that's acting as support and it can't act as support anymore and it just crashes right through it. I love shorting this, especially when it's a blatant pump. Shorting stocks is very scary, as we'll get into. 99% of the world likes buying instead of shorting. People like to bet on success, not failure. But if it's a blatant pump and dump, as we've seen before, especially with a lot of these penny stocks, when it cracks these kinds of key levels, that is a sign that the pump is all over or being close to over, and you should really look to be shorting it. So be aware of these kinds of charts. Here's one more basic chart. This is called the cup and handle formation, where you don't have any specific lines. I mean, you have a high here, a high here, a high here, a high here, a high here. It's all over the place, but you can see the gradual trend where it's kind of like the bottom of a cup. And theoretically, on a cup and handle, it's going to keep uptrending and go even higher. So this is a bullish kind of chart. It's tough for me to play a cup and handle. When it's this choppy, I really prefer clear breakouts. As I said, I like gimmies. My critics say that I trade patterns that are too simple. They like the complexity and the challenge of trying to buy something like this. I just don't want complex trades. Maybe I'm not that smart. Maybe I just don't want a lot of stress. Maybe I've been spoiled by this bull market. Maybe it's a combination of all of them. But I just don't understand, and I don't like choppy charts. So you go with what you like. Maybe some of you guys will like this, and maybe you'll love cup and handles. It doesn't matter to me. I'm not picky. Early on in my teaching career, I was like, you have to follow my rules only. But since I've gotten better as a teacher, I recognize, that we're all different. And it's really about finding patterns and lessons and setups that work for you. Here is an example of a chart that I did buy. This was just the other day on TOPS. This was probably my best pick of 2016, and it had already spiked. This is just a 2-day chart, by the way. So very volatile, where the stock goes from the 1s to the 4s in 2 days on no news whatsoever, just because TOPS is a low float, low market cap play, and that is a pattern that is working very well right now, as you'll see more examples in a bit. But long story short, it spiked pretty big right here. And I missed it. I'm not going to try and get the initial spike most of the time. I mean, this was at like 10:30 in the morning. I think some message boards and chat rooms just started talking about saying, hey, this is a low float play and it's spiking a little bit. And then it becomes kind of like this self-fulfilling prophecy where, even if there's no news, because this company, I think, is only valued at like 7 or 8 million. It's very easy for a $7 or $8 million company to be valued at like 20 million or 30 million. It sounds big in the real world, but it's all small time on Wall Street. And low float runners have been the single hottest pattern right now in July of 2016. So for me, I missed the initial spike, which I often do, but I want to see how it holds that spike. And the day high, if I remember correctly, was right here at $2.57, and it held most of its gains. It's up solidly on the day, but it's holding, and it has support here at like 205. So this little red circle is where I bought right before the market closed, because I bought it at 228. I'm thinking, okay, it can probably retest 257. So there's, let's say, 30 cents of upside. And if it doesn't retest 257, well, guess what? I'm going to cut my losses at like 210. So I might lose like 10 to 15 cents a share, and there's 30 cents of upside from this resistance point. So you might say there's 2-to-1 risk reward. But it also is a little better for me because this is the hottest pattern. Because what if it breaks 257? What if 257 is not the top? Then it could go to 3. It could go to $4 a share, because we've seen these low float runners recently just go truly supernova and parabolic. So while there might be 30 cents of upside, there might be $1 of upside, and really only 10 or 15 cents of downside. So for me, it was worth the risk to buy it overnight. I remember specifically my first millionaire student, Michael Good, was in the chat room and he's like, I don't like it. When I bought it, the stock didn't really budge. People were not fans of the idea, and that's fine. I don't want anybody following my picks. I mean, my picks and alerts are there to help you learn. Some of them will work, some of them won't work. I don't want you ever following an alert. I don't want anybody blindly copying anybody's trades. You should learn from every trade and every alert and every setup. I know that's a tall order to ask. I know you guys just want to trade, but that's what makes my students the most successful. That's why I have more millionaire students than anybody. It's not because people are copying my trades. It's because they've learned to be self-sufficient. So I don't even alert, the second that I buy. I actually type out a whole paragraph or two of why I bought. And some people don't like that. Some people are like, just give me the ticker and buy or sell. And I'm like, well, if I do that, like many other chat rooms, you don't learn anything. I'm not trying to get you to copy my trades. I want you to learn in real time. And so I was kind of happy that Michael Good and several other people said, you know what, this is not a very good setup. And I don't mind, you cannot believe me, you can bet against me, as I know many people do. But for me, I'm trying to take trades that I think that are going to work. Obviously, it's in my own best interest to make good trades and to show you how to make good trades. But I could be wrong on any single trade. And anyways, long story short, it's uptrending a little bit after hours. In the pre-market, it was actually downtrending a little bit, but then it started uptrending before the market opened. And I actually sold most of my position here at 255, thinking that 257 was going to hold as a top because it was downtrending and uptrending, but there wasn't really any spiking pre-market. And I got out the majority of my position at 255, and then it started spiking right at the market open, and I sold the rest around 3. So I had a solid profit, and then an hour later it goes to 4. That's a very good and well-structured trade for me, where I'm buying with a thesis that I think it can retest the highs here. Look at the massive volume the next day. And it's amazing that all this massive volume, all these people buying it right here, did not see it anywhere in here. And it's just because most people are looking for hot plays right at the market open. They just want to say, hey, what's hot today? What's new today? And you can take advantage of that by understanding, setups that are good ahead of time. And that's exactly what happened here on Tops. I made a few $1,000s. That's fine for me. But my students made much more. And a lot of students were selling it at 330, 350, 4, and it was just on their radar. That's what you should use my alerts and really my chat room and any chat room for. Get stocks on your watch list. Watch them in case they show signs of spiking. I know many students who, they didn't see it really moving that much, but because I bought it, it was on their watch list. They knew to watch it. And then when they saw it spiking here, even as I was selling, they were buying because they know that I oftentimes sell too soon. So that's good. I want you guys thinking on your own. I want you to be self-sufficient. And here's what Tops eventually did. This is that chart from 230 and the gap up to 3, and it went to 4, came back down to 3, and then 2 days later it actually was hitting 5. So very, very spiky, very, very choppy, but from the 1s to the 5s on no news whatsoever. And as I'm filming this DVD, it actually went down to the 2s, but after hours it's back up to 4-ish on good earnings. So we'll see if it can run again. As I'm finishing this DVD, I'm off to the Maldives tomorrow. So I'm actually probably going to miss this potential earnings winner tomorrow, which stinks. But, sometimes I'm traveling. I love the Maldives. And, it is what it is. And I bring that up because I want you to understand that personal schedule matters. I'm not going to cancel this trip that I planned months ago for the Maldives just because I have a potential trade. And the moment I land in the Maldives, I guarantee you that I'm going to be looking to see what Tops is doing. And, it'll be interesting. But Sometimes you misplace. All you can try and do is learn and take advantage of them the best that you can. Here's another chart. This is from a few years ago. I just wanted to bring this up because I want to show you what a perfect breakout looks like. You know, with Tops, I bought it. It had not broken the day high yet. But again, because the pattern right now is that, you know, stocks that are spiking on day one often spike on day two, I wasn't that concerned. Sometimes I like buying perfect breakouts here. And this was XXII. This was a wannabe cigarette maker. They came out with like kind of like a less nicotine, like a diet form of a cigarette. And it didn't work out for whatever reason. But I made this blue line just because I want to show you what a perfect breakout looks like. And this is what I love here. So this time it tried to spike. There was actually a big contract announced right here, but it didn't have any uptrend leading up to it. You know, here, you know, you have an uptrend, downtrend, breakout, and an uptrend. Here, this was just a one-day spike, and it was too much too soon, and it lost all of it. But here, you have a nice uptrend, and this leads to a successful breakout, and it went up into the twos. I was trading bigger when this happened. I think I made like 10, maybe $20,000 on this one because it was just a perfect breakout. So sometimes you can wait for those perfect breakouts. I do like to see an uptrend before a breakout. It's very tough, as you can see here, even though there was actually no news right here on this breakout. The really big news was right here. And sometimes the news does not lead to a successful breakout. And no news can lead to a successful breakout. Very important for you guys to understand that, who think that, oh, these stocks only move based on news. Sometimes the breakout itself can become the news. I mean, it's pretty tough not to see that it broke this key level. And so when it did it successfully. Here's another example of a chart I like to buy. This was from a few years ago. This was an earnings winner. I'm not even going to mention the ticker. It doesn't even matter. I want you to start to think about, you know, charts and patterns that work. And right here, you know, you can see here the stock was in the sixes. It looked like it was like right around like $6.20 before they reported earnings. The stock goes, oh wait, no, this is $8. My bad. $8.20 a share here. It goes up to like $9 when they report good earnings. This space in the chart is called a gap up. When there is good news, or, you know, for whatever reason there's a lot more buyers than sellers, and the stock goes up dramatically. So it spiked on the earnings news, but then it had a secondary spike, and it held its spike all day. And I was buying the stock into the close because it was holding its spike well all day. It wasn't, you know, a huge breakout, but I bought it because on earnings winners, as we'll discuss in a second, you know, these plays can have legs. People can discover the news the next day, the catalyst. Analysts can upgrade the stock. You know, more people can see it on the scans as a big percent gainer for the day. There's a lot of potential good developments overnight that happens when a company reports good earnings. And that's what happened here. And on day two, you know, it kept spiking. And actually, like on day 3 and day 4, it actually went to $12 a share. But I want you to start thinking about what kind of news, what kind of setups have legs over the next day or so, like my TOPS or this breakout on XXII. You want to try and say, hey, what kind of stock can just keep going, and what's going to drive future buyers, whether it's earnings or a technical breakout, or, you know, it's the hottest sector right now, stuff like that. You know, it's counterintuitive what works. I know a lot of you guys just want to buy stocks when they dip 50, 75%. You're like, hey, I was taught to buy low, sell high. You know, when a stock drops a lot, it's probably for the wrong reason. So let me just buy it on the dip and you know, sell. With penny stocks, with low price stocks, you can't do that. If a stock drops 50 to 75% in a day or a week or a month, the company is probably going to do something really bad. Okay? You have to remember, most penny stocks fail. And if a stock is dropping that quickly, then guess what? The odds point to that company being the next failure. So you don't want to dip buy penny stocks. If you're trading a stock like Facebook or Amazon, you know, one of these powerhouses, and you want to invest in the long term and you want to buy on a dip, that's fine. You know, it'll probably work out for you. Those stocks are in the hot sector and their businesses are on fire, and that's good. But with low price stocks, do not be looking to dip buy. Look to buy breakouts and look to try and find stocks that can really spike, and go parabolic / supernova the next day. Here's an example. This was just a few days ago on KONE. And again, this is the same kind of chart, the same kind of stock, the low float, low market cap stock as TOPS, where the whole company is valued at just a few $1,000,000. And this stock had no news. And this really freaks people out. They're like, why is this stock going up? There's no news. It must be manipulation. It's not real. Just go with it. Go with whatever pattern, with whatever trend is working. And ask questions never. Okay? Just try and piggyback plays, try and piggyback strategies that work. And I actually missed this one, and I didn't want to chase it. It was spiking here pretty nicely. This is all in one day, by the way. Okay? Pretty crazy. Like, all in, this is 10 a.m. right here when it starts spiking. This is 11 a.m. So 10 a.m. the stock is $2 a share. An hour later, the whole company value has tripled. All because it is the hot play of the day, and it just keeps going. And I know my chat room banked on it. I did not, because I don't like chasing stocks. If I buy, when it's quiet, or when I spot a little bit of a breakout, that's cool. But I spotted this thing here in the threes, and it was already up from 2 on no news, and we're heading into midday. I don't like trading midday, so I wasn't really tempted. I don't feel bad about missing it, but I want to show you an example of just how quickly these stocks can go, especially in this current market. This doesn't happen very often, and that's why I want you learning and studying now as opposed to later, because every day that you have not studied these past and recent patterns, that means that you are less prepared for the next day's plays. And right now, as I'm filming this, every single day, we don't just have 1 play, 2 plays. We're having 6, 7, 10 plays, solid plays of stocks that are going up 30, 50, 100%. There's, just picture all this money out there, and you just have to try and get your piece of it. But it's not going to be by following anybody's picks or alerts. It's going to be by studying and being prepared and being self-sufficient. So here is what KONE looks like later in the day. That run up went from 2 all the way up to 9 before getting a little choppy. I would not trade it, after this little breakdown and this downtrend. I don't know what it's going to do into 1 p.m. here. We're still midday as I took this. But I just wanted to show you how quickly these stocks can run up when it's low float, low market cap, which is the hottest sector right now. It's fantastic. I know several students who didn't necessarily buy it in the 1s or the 2s, but they bought it in the 3s or the 4s, and they sold in the 5s, 6s, 7s, 8s, and they made 50 to 100% on their money inside of an hour. That's pretty freaking awesome. And I know most people hate on penny stocks, but I don't know how you hate on this when you have these kinds of opportunities. It blows my mind that there's still so much hate. But again, because these rules are different than what most people think the stock market is all about, like valuing companies based on earnings and revenues, they don't understand these rules. Sadly, no one really teaches these rules. Frankly, this is why I'm very thankful that my education business is growing. All I have to do is share with you what's actually happening, and it's going to blow your mind and teach you the rules behind these moves. Traditional Wall Street, if you ask anybody, like I have students with, my father or grandfather is a partner at Solomon Smith Barney. He thinks all these stocks are crap, like they're move randomly. Most people on Wall Street have no idea what these stocks are about and how to play them. So they just write them off. People fear what they don't understand. You don't have to fear it. You can understand it. Even after 18 years, I don't fully understand it. I totally missed this play, but I can appreciate it. And that's what I want from you. Here's another play I missed. I don't mind bringing up plays I missed, because even though I missed it, I know I'm on the right track just by almost being there. With KONE, I didn't want to chase it. My rules prevented me from chasing it. But again, sometimes, in this market especially, it pays to be a little speculative. I was speculative with TOPS and I was rewarded. I was not speculative here, mainly just because it was the middle of the day and I wasn't rewarded. But I'm not going to change my rules just based on one play. If maybe 10 or 20 or 100 plays start breaking out at 10, 11 a.m., then maybe I'll adapt. But the vast majority of plays that I like spike right at the market open. And here's another example, MDGS. This was this week, and I missed my buy right here at $2 a share. Pre-market, it was already uptrending. They had a good contract. I believe it was from Johns Hopkins. And they make this medical procedure machine, and Johns Hopkins Hospital ordered this machine. So it was a contract winner. It's uptrending pre-market, but look at the volume. The volume doesn't really happen until the market open. And I tried to buy this right at $2 a share. If you actually pull up a chart of MDGS, a longer term chart, you will see that $2 a share is a big multi-year breakout, multi-month, multi-year breakout. I had a chance to chase it right in here at 230. You can't really see it, but it paused for about 30 seconds here at 230-ish. And I could have changed my buy order. I was just trying to buy 5,000 shares. I could have bought 5,000 shares here at 235-ish. So I would have paid roughly 1,500 more, but I didn't want to chase it. As it turns out, I should have chased it in this market, and this is all in the first 15 minutes, and it goes from 2 to 325. I missed it personally, but I brought it up pre-market to my students in the chat room, and I would guesstimate maybe 300 to 400 students profited on this. And we're talking about profiting, buying it at 2 or 220 and selling it at 3 or 320, making 50% on your money inside of 15 minutes. And then it did nothing, and it went straight down. But this is just an example of how quickly these spikes are happening. Here's a chart from a few years ago. This is actually a chart I prefer more, where, this is VLTC. The stock spiked from 1 to 3 on news of Carl Icahn, who's a very well-known and popular and successful billionaire investor investing in this company. And frankly, it didn't really do anything for several days. But on what is this, day 3 of the news, it breaks $3 a share and goes to 376. So I want you getting used to keeping track of big percent winners for several days. Don't just say, okay, it's a big percent winner here on day 1. On day 2, it's not really doing much. Let me take it off my watch list. No. If a company has, good news, a big new investor, reports good earnings, a big new contract, something that might have legs, that's meaningful for the business, I want you watching it on day 2, on day 3, on day 4 of the spike, because this is not an exact science. And the interesting thing is I didn't want to chase this here. I was buying it in the mid 2s, and I sold a little too soon, I remember. And, I didn't want to chase it. And little did I know, 2 weeks later, the thing would go over $20 a share. So I often miss trades because I don't want to chase. And here's a continuation of that chart where it just keeps going. And the breakout here was at 320, and it goes to 376. And then, right here, it just keeps going, and then it goes to 476. And then it calms down for a few days, and then you have another breakout. So it doesn't happen all at once. You're never going to see a stock go from 1 to 20 all in an hour. Although we have seen stocks go from 1 to 9 in an hour lately. But usually this is more like the case where you have spiking, you have an attempted spike, failure, no spike, successful spike. So really train yourself to be on the lookout for these plays for multiple days and to be aware that they can spike again and again. Here's a good example. This was just the other day on SPU, which I was buying this, in the 5s, and I actually missed this run up, but this was just an astounding breakout on day 1. This company makes fruit juice, by the way, so it doesn't even have to be like some amazing technology. It's right now we're in a very speculative market, and SPU is a low market cap, low float kind of play, only valued at like $10-20 million, and it spiked. And I missed this initial spike, which is fine. But look at this, on day 2, it spikes right to the former highs of 580-ish. It actually goes to like 6, and it comes down and using 560 as support, and then goes to 755, all in the same day. This is the play that I want you to really try to make. As I said earlier, sometimes you have the breakout and then it comes down, and can the breakout hold? So this broke out past the former highs of 570-ish to 610, and where does it come down to? It doesn't come down to 570. It comes down actually to like 558, it looks like. So the breakout is kind of in doubt, and yet it just keeps going. It's not an exact science. You have to learn to try and look for the trend. And I know my whole chat room banked on this. Again, I did not want to chase. I hesitated at first and I missed it. What I did do right, though, was on this one, KURA. This was spiking the same day as SPU, very similar charts, where it too had spiked from the 3s to the 5s on day 1. And then look at this on day 2. You can't see it, but maybe if you look really closely, this is a day 2 morning spike from 5 up to like 650. It broke out past the day high of 560-ish, and it went all the way to 590. You can see here, actually, if you look really closely, there's like 3 or 4 red candles. So for like 3 or 4 minutes, and I alerted this in the chat room, I said, oh, 590, I missed it. I missed my opportunity to buy. But it dipped right to like 565-ish, which was the former high. And this is on a Friday also. I should mention that morning spikes occur more on Fridays. Spikes occur more on Fridays because short sellers are scared on Fridays. They don't want to be short stocks that can just keep running. They don't want to think about it. Short sellers are very scared right now, and you don't know how far these junk stocks are going to keep running. So short sellers don't want to initiate or hold positions on Fridays. They'd rather just, take the day off or, exit positions so that they don't have to think about what could happen over the weekend. So I'm more likely to buy on Friday morning spikes. So I missed this spike on SPU. This had already happened here. But KURA was the exact same pattern. It had spiked the previous day. It was a low market cap play, not quite as low float, but it had a secondary spike. And while I missed the initial breakout, I caught the dip here. I believe I bought it at like 560-ish, right at the former highs. Former resistance now becomes support. And it got all the way to 650. I didn't sell it at 650. I sold it at like 6-ish. And then it actually failed versus, SPU, which just kept going. But that's how I need you to start thinking. Where is the breakout? If I miss the breakout, do I want to chase? Most likely the answer is going to be no. Are you okay with, missing the trade? Do you feel comfortable not feeling guilty? Because a lot of people say, oh, I need to buy the breakout. If I miss it, I'm going to hate myself. And so they buy the breakout and, sometimes they chase it because they're so afraid of missing out. FOMO, fear of missing out. I don't have fear of missing out. It's a very big pain in the butt for me to trade a stock and issue an alert and type out my whole reasoning. It's very stressful for me. I know I have several people who trade against me. I don't look forward to trade. And that's a good thing because it forces me to only trade the best plays. When I'm in the Maldives, I guarantee you that I'm going to be trading less than when I'm in Miami or Beverly Hills because the time zone stinks. I'm a little bit in the vacation mindset. And if you actually look at the data, hold on one sec. I got my dog here. This is real. Miley, I'm making a DVD. Show these people some respect. Sorry about that. Even though I travel a lot, I'm still trading. And my data, if you look at it, is actually far better when I'm traveling because I'm choosing better trades. So I want you thinking like that. I don't want you thinking like you have to trade every single day. And I want you thinking like you're maybe a retired trader and you're only going to come out of retirement when there's a play that's good enough where that you're like, oh my God, if I miss this, I am going to feel guilty because this is my exact pattern. That is the kind of, play that you really should be in. Only when with a good amount of, accuracy. And I know that if you're just beginning, this is going way over your head. You're like, well, if I know a stock is going to do well, then of course I'm going to want to trade it. You will learn over time what you do best at. And you will learn over time what are the best plays. and you will feel guilty missing those best plays because it's kind of like free money. I mean, you're not going to win 100% of the time, but if you really focus on the best plays, whether they're long or short, I mean, you can win like 70-80% of the time. And that's pretty damn good. And even if you lose, if you cut losses quickly, it's a small loss versus your longs, theoretically, you're going to make more money. Or even if it's a short, but your wins are going to make more money. So I missed SPU. I nailed KURA. Here's another play that was spiking the same day. This was another low float, low market cap stock. I'm telling you, this is the trend right now. And OPTT, this was on Thursday, nice spike. And then guess what? Friday morning, when it broke the day high here at like 550-ish, it goes to like 650-ish, and then it goes to 950-ish. And this is all by noon. So this is all in like 2 hours where the stock doubles. No news, just welcome to Fridays. Welcome to this hot market. And if you think, 3 to 9 is impressive in 2 days, well, wait till you see what it does. It comes back down, actually. So it goes from 3 to 9, which is cool, comes back down to 6. And guess what? Look where support is. I want to be very clear about this. So it comes down from 9.5 down to 6. But what is this bottom here? I don't really understand why it's bottoming. It's probably just because it's dropped so much in one day. But it has no former resistance at the 6 level. The former resistance should look like right here. And this is at 5.5-ish. And guess what? On day 3, it uses 550 as support. And that's exactly what happens. And it goes to 880 in a few hours. So even if you miss this initial run up, just by looking at where the former spike ended, you can find support. And that's exactly what happened here. And OPTT just kept going all the way up to 14. So it's not all 3 to 14 at once. It's built on, this uptrend, this morning spike, this downtrend, this morning spike, and then the biggest morning spike of all would look at all this volume. And there is no news to support this, okay? And this is, mind you, a company, I think actually the news that was coming out when this spike was happening was terrible. I think that they've denoted that they're under SEC investigation. They don't have really any revenues. They have no real business whatsoever. And this is what happens. And I'll show you some more charts of OPTT. So just remember this. There were some signs that it could spike like this. It's just, the signs aren't that obvious to everybody. Here is ESI. This is from a few years ago. And I want to show you, just some charts from a few years ago and some charts from now, just so you can understand that, there's different kinds of setups. This was my buy alert on ESI. And again, this is very similar to my TOPS trade where the stock had already spiked. But I bought this right near the market close, which I like doing because it bounced off this midday dip. And I thought that it could retest the morning highs. You'll see me do this quite often where if a stock is finishing strong on day 1, I'm going to buy it near the market close thinking that if it could get close to the morning highs, it can spike. And even if it doesn't spike, it'll double top here. And because it's not closing right at the highs, I'll have a little decent profit, even if it double tops. I totally did not know it was going to go from 5 to 11 the next morning. But this is the potential here with morning spikes. And as I said in my buy alert, it could have more shorts getting squeezed tomorrow. This was an earnings winner, if I remember correctly. And when you have earnings, good earnings and a lot of shares that have been shorted, a lot of people betting on a company's failure. They don't necessarily read about the good news or they don't necessarily want to believe the good news all on day 1. So earnings winners can really spike on day 2 or day 3 or even day 5 as we've seen. But when you have, I totally forgot how many shorts were actually shorting this stock. You can actually go back through my video lessons if you want to go back and look at October 2014. It's all archived. This is one of my 4,000 plus video lessons on Profitly. But there were tons of shorts. I want to say there was over 10 million shares that were short. And when 10 million plus shares are betting against this company on failure and they report good earnings, guess what? Guess what those shorts are going to have to do? They're going to have to buy to cover. And if you want to know more about shorting, go watch my short stocking DVD. All my other guides are kind of preparation for this. I'm not going to go into the details and the basics of short selling. We're beyond that. I have too much to cover. You have to understand what short selling is and what a short squeeze is and what the public float is. This is not necessarily going to be my most basic guide, but we're putting together all of the various elements that I've taught over the years. So this is a day one spiker with earnings, lots of shorts, and it's a little off its highs. And if it goes past its day highs, it's going to trigger potentially a short squeeze. I had no idea it was going to go to 11. I was not saying, oh, this stock could go to 11. I think I sold it here at like 6-ish, and I made like 30 or 40 cents a share. I thought that maybe it could go to 7 at best. I underestimate things sometimes. But again, I'm on the right track. I understand that there could be this kind of supernova, parabolic, sonic boom type price action if everything comes together, perfectly, which, sometimes it does. Most of the time it doesn't. Here's a good example of VGGL. This was an earnings winner. I was actually trading this on a plane. I specifically remember because my Wi-Fi was going in and out, and it was tough for me to even get executed. But it was already up. The previous close was in the 1s. It was already up to the 2s. It was uptrending, holding near the day high. I don't like buying, midday. Again, this is 10 a.m., this is 11 a.m., this is 12 p.m., this is 1 p.m. Even 1 p.m. where I bought, it was a little too early, but part of the reason why I bought is because my Wi-Fi was going in and out, and I wasn't sure if I was going to have Wi-Fi at the exact right time, really like 2, 3, 3:30 p.m. Eastern, which is where I prefer to buy. So I bought a little early, and we got a nice run up. I did not hold this whole way. I think I was selling for like, maybe, I don't know, 20, 30 cents a share. Again, the biggest indicator here was my own personal schedule, my own personal situation. If you're traveling, if you have limited access to the stocks and the charts and trading, you should be more conservative in your trades. So you won't see me, first of all, you won't see me hold for this kind of a gain. I mean, this stock is going totally parabolic, whereas in the morning, it can't even go up 20 cents a share. So this was a little out of character that it went up so much. But for me, I specifically remember selling too soon because of my situation. And I'm not embarrassed about it. Some people think that I should be, but I don't, that's life. Life gets in the way sometimes. Here's another example, You On Demand. And I just want to show you chart after chart after chart to get an understanding of the kinds of moves that I like, the kinds of moves that are possible, even when there's not that many signs ahead of time. Here's a 14-day chart of You On Demand. They're like a little wannabe Chinese Netflix, except they just have hardly any subscribers or any business. This was in my long-term portfolio for a while, and it just did nothing. This spike here from 260 to 330, I mean, they announced a deal with Disney, okay, which is a huge, huge win for a small company like this to be able to distribute Disney films. And the stock did absolutely nothing on that news, and it came right back down. What spiked the stock from the 2s to the 4s, and actually I think it even got up to 7 the next day, was a Seeking Alpha article that said this could be the next Netflix. So a contract with Disney didn't spike it that much, and I was actually disappointed. I remember I was buying this, and I think I got out. I don't know if I got out for a small gain or a small loss, but I was definitely really angry that the Disney deal, I think it was their biggest deal of all time at the time, didn't do much for the stock, and then this stupid article, did it. So the lesson from this is that you can't choose what's going to happen. Okay, some stocks are going to spike on just news, like when the media picks up on a story. Sometimes it's going to spike on earnings. Sometimes it's going to spike on the hottest trend, like TOPS, SPU, OPTT right now. You just have to be open to it all. Be receptive. At the time, Seeking Alpha was very influential, and Seeking Alpha did this to a lot of stocks. So this wasn't the only stock that Seeking Alpha spiked big. Since then, Seeking Alpha has lost their content partnership with Yahoo Finance, so there's a lot less readers, and I can't even remember the last time they spiked or even dropped a stock when an article came out. So the trend, this was in, I believe, 2014. The trend was very hot for Seeking Alpha at the time. Now Seeking Alpha is dead. You got to adapt. Here is one more example. GRNH, speaking of dead trends, this was when, marijuana stocks were so hot. And this was a stock, GRNH, I mean, this is in 2 days. It goes from 24 cents to 48 cents. And then you have a morning spike up the next day to 96 cents. And this was a stock, I think it was like 2 or 3 days before, it was at like 5 cents. So 5 cents to $1, all because marijuana stocks are so hot. This could not last. If you read a great article I did with Men's Health magazine, it was me versus the Wolf of Weed Street, who was like kind of like this promoter of weed stocks. And at first, the reporter spent, I believe, like 2 weeks with this pothead investor saying, weed stocks are going to change the world. This is a game changer. And the reporter was all on the side of, the weed people. And then he met me because I started talking trash about these weed stocks, saying, hey, these look exactly like pump and dump patterns. I'm scared to really short them because I don't know how big, legalized marijuana can be, but I know patterns. And the patterns say that these stocks are going to drop. And we got in a big fight. Men's Health detailed our entire fight. And in the end, I was 100% right. All of these stocks dropped 99%, while the Wolf of Weed Street's, stocks just, his credibility withered, his account withered, his influence withered. So I'm proud of that. And GRNH, I actually was shorting this. I believe I was on a flight on this one too, and I went way too big. I think I was short like 100,000 shares. You don't want to short 100,000 shares of a stock that's spiking like this. Thank God this was back in 2014 when the bull market wasn't as strong. Or maybe this was even 2013. I don't even know. This was a few years ago. But if there was a hot sector right now, you don't see me shorting stocks at $1 a share aggressively, because it could easily become $2, $3, $4, even $9 a share same day, as we've seen lately. But this was overextended for this weed stock. Here's a better chart of that morning spike, 63 cents, and it went all the way up to $1.20. And this is in the first 15 minutes of the day. So again, some of you guys think, oh, Tim, you're in and out so quick, I can't even follow, these spikes, give it some more time. Well, no, sometimes these spikes happen in 5, 10, 15, 20 minutes. And I shorted way too big. I think I got my average at like $1.02 or something, or maybe $1.04, and I covered at like $1 or something. I definitely got my average up to shorting in here. Like I do like shorting morning spikes a little bit. My top student, Tim Grattani, this is, I think, his main pattern, shorting ridiculous morning spikes. But I was just trying to average up and get my average up. And, I went way too big, and I'm on a flight. And actually, I remember because my fiance, or my girlfriend at the time, now she's my fiance, was with me. And she said she felt like the ridiculous amount of tension. She didn't like me trading on planes because the Wi-Fi can go in and out. And, I'm betting like roughly $100,000. I don't bet that big anymore. I trade with a much smaller account. But when you're shorting or even buying a stock like this that's so speculative, you have to really kind of be more careful. I've gotten more conservative in my old age. But long story short, my short was dead on, even though I freaked out and covered. I think I made a few $1,000s. And it dropped 50% in the next the next 30 minutes. So you have a stock that doubles in 15 minutes, and then it drops 50% in 30 minutes. That's the kind of volatility that I really like to trade, long and short. And we'll get into more shorts in a second, but I want you to understand how quickly this stuff can change. So, when you see commentary, or if you see me having a buy alert, I don't really like buying and shorting the same day. I actually tried to short Tops that day that it was breaking out, and that was a bad idea. I had to cut losses quickly. It confuses students because they're like, wait a minute, you were buying this stock and now you're shorting it. Which one is it? Make up your mind. And, I've been called like this politician, like flip-flopper. And I'm like, well, that's what trading is. You're not married to a position. But I know it's tough for beginner traders to understand why a company might be a good buy for 10, 15, 20 minutes and then a good short for 30 minutes. But this is a good example of exactly how that can happen. It totally depends on the price and the pattern. And as you see more and more of these, you'll start to learn that. So this is why I say I'm a glorified history teacher, but it's your duty to study that history. I have 4,000 video lessons. They're only 5 minutes long each, remember, 300 hours of study, a little over. But the more patterns you see, you will start to recognize when is a good time to buy, when is a good time to short, and how it changes in different markets, different months, different years, different trends, whether it's marijuana stocks, low float stocks, earnings winners, big hedge fund investors. Whatever the catalyst is, you have to be willing to change. And I think that's probably my most important lesson. And that's also the toughest lesson for me to get across to you. I wish that I sometimes was just like a basic math teacher and I could be like, 2 + 2 = 4 every time. That's not the case with the stock market or stock trading. Oftentimes, what has worked for several months or several weeks or even several years can change, and you have to change with it. And if you do not, if you can't adapt, you will perish as a trader. So I hope I'm making myself clear. I know I'm showing you just tons of random charts, but I want to show you example after example. And if you want more, I highly encourage you to watch my 4,000 video lesson library. I'm not going to put it into a DVD. It's 300 plus hours. It's already on the Profitly website. But it's up to you to study and you to really understand these patterns. You'll see me make good trades. You'll see me make bad trades. You'll see me short sell well or cover too soon or, miss plays. But I'm trying to show you the various potential trades over time. And that way you can get a good feel and see what you're most comfortable with. So whether you go long or short, I don't care. As long as you're adapting and you're choosing what you like. There's nothing worse than a trader who's like, I don't know what I'm doing. Let me just click buy. Oh, I hate this. I don't know. No, make trading all about you. Choose patterns that you like. And if you don't know what patterns look like, study the past.
My name is Tim Sykes, and I teach people to trade stocks. I am a self-made multimillionaire.
So this is the ideal trade that I'm going to talk about. I want you guys to understand every single aspect of this trade.